In this video, we're going to talk about one of the biggest decisions that you will make when you're filing your 2025 tax return, and that is going to be choosing between the standard deduction and the itemized deduction. Stick around because this choice could mean saving hundreds or even thousands of dollars on your tax bill. So let's jump right into it. Hey, what's up guys? My name is Chase and this is a painting pictures guide to personal finance. Hit that like and subscribe button and let's jump into that video. So what is a tax deduction? Well, before we dive into the details, let's quickly define what a tax deduction is and how that affects you. Simply put, a tax deduction reduces your taxable income, which in turn will lower the amount of tax that you owe to the federal government. The more deductions that you claim, the less of the income that is subject to taxes, and then therefore will be less paid out to the government. But the big question is going to be, should you take that standard deduction or should you use the itemized deduction? So we're going to break it down even more in this video. So first up, the standard deduction. The IRS offers a set deduction amount based on the filing status that you will be doing for that year. For 2025, here's what it's going to look like. For single filers by themselves, they will be able to deduct up to $14,600, whereas married filing jointly will be able to deduct $29,200. Now, if you are the head of household, you will be able to deduct $21,900, and if you are married and filing jointly, or married and filing separately, then you will be able to deduct $14,600. So one of the best things about taking the standard deduction is that it's super simple. You don't really need to keep track of expenses, receipts, and you'll be able to fill out any additional forms. So it makes it way easier not having to think about all these extra parts that go into the itemized deduction. It's the go-to choice for most taxpayers out there because of the ease of access of applying through your taxes. So if you do choose to itemize, you'll need to add up all the eligible deductions and see if those will exceed the standard deduction. The first step is identifying what actually counts as a deduction, and here in this video we're going to go a little bit more into depth on what those are. Here are some of the most common deductions people itemize. So the first one is going to be mortgage interest. Homeowners can deduct interest paid on mortgage loans up to a certain amount limit. You can deduct that mortgage interest you paid during the tax year on the first $750,000 of your mortgage debt for your primary home or second home. So you can't deduct $750,000, but you can deduct the interest associated with the first $750,000 of your mortgage. And then that amount will then be added into your itemization. All right, so number 2 is going to be your state and local taxes. Now, this is deductible and it will include property taxes and state income or sales taxes, but it's going to be capped out at $10,000 for that year. So make sure that if you go over that, you cannot deduct any more than that $10,000 mark. All right, number 3 is going to be the medical expenses that you did spend during that tax year. If your medical expenses exceeded 7.5% of your adjusted gross income, then you can deduct that excess amount. And hopefully you won't have to use this one because that means something happened. And ideally, this is not one of the ones you want to use, but a lot of people can use this just because medical expenses can be so expensive. All right, number 4 is going to be charitable contributions. Now, most people out there are going to meet this category. Donations that qualify for charitable contributions are going to be churches or other donation locations that can then add it up together and go towards your itemized deduction. Now, this will depend on your income, but for most part, this should be able to apply to your itemized deduction. Now, if you go and you donate some clothes to Goodwill or you do something else like that, just make sure you get a receipt because then they can then add that together and every little thing will add up. All right, number 5 is going to be the casualty and theft losses. So if you suffered a significant loss due to a federally declared disaster, you might actually qualify for a deduction. So one of the things that might be most commonly occurring is something that happened, like a flood, a hurricane, if there's a fire, then if those did affect you, then you can qualify for those deductions and add those to your itemized deduction. So if your total itemized deduction adds up to more than your standard deductions using some of the ones that we use above or some of the other ones out there, then we can then talk about your situation, and then in that case, itemization would be a better financial move than going with the standardized deduction. So if you do keep track of that, then that is one of the best things that you can do. Even with adding up your itemized deductions, they may not exceed the standard deduction. And for most people, this will be the case and they will continue to work with the standardized deduction. But there are a few situations where the itemized deductions would be better and would more likely lead to a higher deduction than the standard. Here are a few scenarios where itemizing may make more sense, and it might be more associated with your current situation if you're watching this video. So situation number one is going to be if you own a home and you pay significant mortgage interest and property taxes. So depending on how much you spent, then you could potentially deduct more and it can meet that itemized point. All right, so number two is going to be if you had a high medical expenses that exceeded that 7.5% of your AGI for that year. Again, ideally, you're not going to be using this one, so you won't have to use medical expenses. But if that's the case, then you can take that and you can then apply that. So that might mean that you would meet the itemized deduction specifically on that year because of all those medical expenses. All right, number three is going to be if you made a substantial charitable donation. So we talked about that earlier, but if for whatever reason you met and you did meet that charitable donation, whether that's to your church or your local charity, then that could mean that you could meet the itemized deduction more compared to the other years if you did not make those large sum donations. And then number four is going to be if you live in a high tax state or you do use some sort of SALT deductions and they're close to that $10,000 cap. So if you have any combination of those, these are the most likely causes for you to be able to tax deduct a little bit more and meet that itemized deduction. If none of these apply to you, then more than likely that standardized deduction is going to be the best bet for you. So just make sure you look through all that happened in the past year and determine which one is going to be the best for your current tax situation. All right, so let's look at an example to see all this in action. So if we meet Sarah and we meet James, and they're both single filers, Sarah takes the standard deduction of $14,600, whereas James, on the other hand, has the following deductions. He has mortgage interest that totals up to $6,500. He has state and local taxes that total up to $5,000. And then he has charitable donations that's $3,500. In addition to that, he has some medical expenses because they did exceed past his adjusted gross income of about $1,500. So if you add all those up, his total itemized deduction is going to be $16,500. So since James' itemized deduction exceeded the standard deduction, he should be able to itemize to reduce his taxable income even further when compared to Sarah. But if his deductions had been less than $14,600, taking the standard deduction would have been a better and smarter move in his case, even though he had all those tallied up throughout the year. Now, before I leave you, I want to also go over some of the most common mistakes people will make when choosing between the standard and the itemized deduction. So one of the most common ones, and number one of that, is going to be forgetting to check last year's return. If you did itemize last year and your situation hasn't changed much, you might want to do the same. So if you're not really keeping track of it and you're just kind of clicking through the online TurboTax and you're not being very cognizant of what happened last year, you might not be deducting as much as you can as you might have done in the previous year. All right, number two is going to be not going and keeping a record of all your receipts. So there might be a case where you actually can itemize and you had more than the standard deduction, but you need proof of your expenses to make sure that this is a valid option and that it's legitimate in the IRS's eyes. Remember, this could not count unless you can prove it with your receipts. And so just make sure that you're keeping up with those and keeping a good bookkeeping. Otherwise, it could hurt you in the long run. And then third is going to be overlooking deductions. It's hard to keep up with everything with there being multiple deductions, and sometimes we miss one or two of them. So some deductions like medical expenses or charitable contributions are often missed. So just double check before filing to make sure that they are accurate and adding up to the complete totals that you're looking for. All right, so in the end, it's up to you to ensure that your taxes return is accurate and the best representation of your situation. It's your job to always compare both options, and itemize and standardize will depend on your current situation. So we have said this in previous videos, but we would recommend to use a tax software or a professional to ensure that you're making the best choices. And if you want free tax software options, then the IRS Free File is going to be a great option for you to ensure that you're making the best choices. If you want to look at other ways and other options and other videos, then we will dive into those in our channel and we'll be posting those on a regular basis. And lastly, if your deductions are close to the standard amount, it may not be worth that extra effort to itemize. So find where works best for you and stick with that option. If you found this video helpful, don't forget to hit that like and subscribe button for more tax saving tips. And remember that we are here from your first penny to your first million. We'll see you next time.